everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel stabilized and rose. The domestic spot price of hot-rolled coils increased by 20 yuan ton, and the price of rebar went up by 10 yuan ton. At the macro level, the game between China and the United States has eased, and the two countries have reached a general framework through consultations, leading to a slight improvement in macro sentiment. Domestically, the 14th five-year plan has been released, and it was reported at the end of October that relevant stimulus policies would be introduced to boost the economy in the fourth quarter. On the whole, the current macro environment has improved significantly compared with the previous period, and the focus in the next stage will remain on China-US negotiations. On the industrial side, the weekly output of the five major steel products increased by 83,700 tons. However, the daily pig iron output dropped to 2.39 million tons this week. In contrast, the usage of electric furnaces, or scrap steel, increased. Specifically, the weekly output of hot-rolled coils rose by 36,500 tons, and the weekly output of rebar increased by 59,100 tons. Due to the production restriction in Tangshan at the end of the month and the steel decapacity, steel mills' profits are expected to recover. On the demand side, this week's demand increased by 173,200 tons, compared with last week, which is in line with the seasonal recovery of demand in the peak season. The market's main focus remains on the speed of demand recovery and the judgment of the upper limit of demand. In terms of inventory, the overall inventory of the five major steel products decreased by 274,100 tons this week, with both social inventory and mill inventory declining to a certain extent. By product type, the inventory of rebar decreased by 189,400 tons, while affected by production transfer, the inventory of hot-rolled coils still faces pressure, with mill inventory continuing to increase by 8,700 tons. To summarize, the steel market is in a state of not prosperous in the peak season, with a small range of seasonal changes. From the current output perspective, the overall steel inventory may face relatively high pressure in the later period. The production restriction of steel mills in Tangshan at the end of the month is expected to affect 410,000 tons of pig iron output, which is likely to ease the inventory pressure to a large extent and provide certain support for steel prices. In the short term, there are few contradictions in the steel industry at present. Production restriction and capacity replacement policies support steel prices, and the maintenance of relatively high pig iron output keeps raw material prices firm. However, given the current demand, the upside space for steel prices is limited. As the profits of special steel are already very low, or even at the break-even line, the flow of pig iron has shifted to the production of ordinary steel. Therefore, we need to pay more attention to cost-effective products such as special steel and section steel. For procurement, it is only recommended to focus on rigid demand procurement and appropriately increase the inventory of high-quality resources with good cost-effectiveness. From the institutional perspective, the current counter-reaction to involution and the impact of macro sentiment are increasing. On the fundamentals front, the sustained demand for construction steel remains weak with limited improvement. However, there is certain support for plate demand. Additionally, the prices of raw materials for high-speed rail and underwater projects are relatively strong, providing price support on the cost side. To summarize, there is support for steel prices in the near term. In terms of product categories, consideration can be given to steel types with increased cost-effectiveness, such as special steel and section steel. Currently, after the decline in billet prices, partial procurement can also be considered. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.